Good afternoon. Welcome to OptionsTender. We're taking a look at, real quick, I just want to show you what we have in the Discord. I'm not going to go the full tour, but this is going to have to do directly with our analysis today. So we're looking at the dark pools, and then we'll take a look at Tesla as well, because we have the shareholders meeting tomorrow. And so we'll talk about Tesla just a little bit. Now, we're doing this intraday about 12:23 Eastern Standard Time, PM. If you want to get these videos intraday, consider becoming a YouTube member. It's a YouTube supporter. It's 99 cents. It comes with this Discord as well. And also we have our upper $4.99 for detailed videos on how I get these trade setups and where I'm looking to get these take off the trades and add on. So, okay, looking at the Discord here, notice that we have in the dark pools a SPY. A lot of them are coming in at 675 with these large amounts. And what I think this is setting a floor, okay? And these started coming in early today. And so I think I'm interpreting this as SPY not being able to go under there, just kind of giving us confirmation on our reversal that we talked about in yesterday's video. But the more important thing is, where is SPY going? And with our regular analysis, we have our Fibonacci retracements and such, and we had come up with this spot anyway, but it gives us a little bit more confidence. If I can go to yesterday, between right after the close. All right, let me scroll up here, about 416 there, and about 407. Okay, so right after the close, and even before it too, you can start off with right before the close, you have the 683 SPY. Just keep that in mind. About $1 billion came through over and over and over right after hours. Boom, 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 boom. What is this telling us? It's certainly setting up some sort of call wall, if you would. An attraction for price to happen, but it also could act as resistance. So let's keep that in mind, 683. And also, when we touch on Tesla, I want to go over to this real quick, our order flow. By the way, if you're in the Discord already, if you want to search for these items, you can go to the channel specifically and then the name that you're looking for it in there. So along with that, we're getting a lot of 460 calls. I'm not going to go into detail about all of these. And then it's no coincidence that we had tons of them, big money, $7 million at a time. There's a lot more unusual call sweeps happening at 480. Okay, and we have a catalyst coming in tomorrow. I don't think that's really a coincidence. So will it happen? Is it 100% probability? No, but I just wanted to show you that. And there's tons of them coming in. Okay. Now, and then I'll show you the setup. Let's go through SPX. We'll go through our regular analysis, and then on the 65, I'll show you, we'll end off with Tesla. All right, so make sure you stick around. I do these videos each and every day so we can kind of catch these turns. We looked at this as being a possible inverse hammer, and that is the case right now. That's what's happening. So let me close this up. So here's SPX, a naked chart here. This is our last wave that we've been looking at. We're looking for a top to be done here. Obviously, price can go higher in this channel, but with the naked chart, you can get a view of what's happening with candle setups and such. Now, this looks like a three-wave move here on the daily time frame. We dissected a little bit more on the lower time frame so you can get what I think is a leading diagonal, and that's what stopped us here at gap support and also former highs. So clearly price is important, this level, when you gap above it, to hold on to it. So this certainly became support, and we're also leaving open two gaps here. So that was another clue that I thought, hey, maybe we want to close one or two of these before we head any lower. Now QQQ only has one gap to fill. All right, so let's go ahead and look at our trend. Yes, so that was another spot we looked at. It was a 20 exponential moving average where we bounced right off of that. All right, putting on our traditional look. Okay, so we had here Let me pull out just a little bit. We have this trend line that was valid all through this, a little bit of a fake break. And then we threw over it and came back and rejected off of it. Now we're holding this consolidation area. So this is very important. When we get into this area, we should easily head back down to the lower part of the zone. Okay. Yes, some alerts are going off here. We're starting to rise higher. I do think we're going to close the gap. And we might even go a little bit above, depending on what kind of catalysts are happening, and close that other gap. And that would bring us right back to that trend line. Now, is it going to happen today? I don't know that for a fact, but at 1 o'clock p.m. Eastern Standard Time, we're looking at presidential economic speech. So maybe there's a catalyst there. There's all sorts of things that are kind of looming. We have the courts that are making decisions on tariffs, but they're just having their talks today, and then it could take weeks for it to actually get a verdict on that. So again, things are happening. You never know when they're going to take place, but that's the catalyst we certainly have today is the economic speech. And then tomorrow with Tesla, we have the shareholders meeting. And so when we get to Tesla, we'll talk a little bit more about that shareholder meeting. Okay, so we have our traditional look. Here's your moving averages. We're fighting with that 8 EMA right now. That's a tough spot. It's our momentum indicator, but know that our trend is still up. So we can still get above it and fail. All right. That's what I'll be looking for, is to get back into supply and actually fail both of these and get a reversal from there. Again, I think it's more clear on the lower time frame, but we'll look at that. And our McClellan oscillator bouncing off of that oversold territory. I do think we're going to get much deeper, but this bounce is certainly in play first, and then we should head lower from there. DMARC, 4 setup, 4 count, no setup yet. Let's go over to SPY. All right, if we put our traditional look there's the channel. You can certainly continue to move up on the channel if price wants to go higher. We have some unfinished business up there. We talk about that all the time. We have the options expected move up there, and we have the channel top. So if you want to keep those hedges on, if you think of reversing like I do, you want to hedge to the upside just in case those catalysts just rip us to the higher end of that channel. And then likewise, if you're bullish and you're looking for that higher channel and you have your calls or stock waiting for that target, then maybe you want to add, as price goes higher, maybe you want to have a little bit of put protection. Okay, going to divergences. You're not going to catch any new divergences. Obviously, we're not making new highs or anything. But let's just check out the money flow index. See, it's starting to rise a little bit. I do think we're going to get a lower high, but maybe this pushes high enough to where we get into the overbought territory. That'd be a setup in itself. All right, looking at the Bollinger Band, we bounced off of that 20. It's that same 20 exponential. So no setup here, but clearly we're getting a reaction off of that. Going to the VIX. All right, so my Lulu calls just closed. I'll have to let the peeps in there know. And some SPYs. I'm going to pause this real quick. Okay, sorry about that. From here, we want to go over to VIX. And with the VIX on, we had this minor cycle low. So that's what we were talking about, this rejecting off of that 200 moving average. Let me put the moving averages on there. And we're coming into support again. So that's our breakout zone. And clearly VIX moves very volatile, no pun intended. And we're getting underneath that 8 EMA. I do think we're going to regain this 17 area breakout zone, but I think it might hit this 50 to 100 first, all right? And all of this was, we were talking about yesterday being considered one move. And now we're retracing for that one move. And I think we're going to get a higher low in that minor cycle low, which the ideal low is today. So with that said, going into tomorrow, the VIX is already at 8%. So hopefully we can see it like a 10%, negative 10% move. on the close today, and that would give us a good probability that the next 2 days will have a green day. Okay, so we can continue our rise to the upside, and then we'll look out later on for more cycle lows here. Okay, let's go to SPY on the 65. So there's your traditional look. And we kind of held this trend line made from that ascending triangle, came back to it, and you can say we're back testing this triangle as well. So do we go higher from here? There's certainly an argument from that. And what some people are going to say is that this is a clear 3-wave move. All right, I don't think that's really the case. I'll dig in closer in just a second, but we're closing this gap, and guess what? The gap closes at right around 683. There's no coincidence in that. I do think that we reverse somewhere around here. We have a possible trend line, downtrend line to reverse from. If we go directly today, I adjusted it a little bit higher. If we go today, you could put it here, but I think it's going to be a little bit higher to close the gap, or at least a spike through. It doesn't really matter how you hold it, just as long as you know if price reverses off these levels, and you could see a reversal from there, and that's you can draw your trend line from there. All right, so we'll look at the indicators in 1 second. Here's what we're looking at. Here's the wave count, and I'm going to go a little bit closer here because I want you to see. I don't usually do this on the. Let me go open this up a little bit. 5 days. Let's go 10 days. All right, so here's your top, and I'm looking at this as a leading expanding diagonal. So you have your one, the ABC for 1. You get that nice retracement here for 2, nice deep. All right, and then an A, B, C. All right, this was very ugly. Couldn't tell what was going on. Looked very corrective. That's because of these diagonals really mess around with you. You have your overcrossing waves. And so that's 3. You get your nice big wave 4. All right. And now A, B, C for a 5th wave into 1. So here is the kind of like art of looking at these things. I think this was the low. A lot of people are going to count this as a 5-wave move and an A, B, C, and you're done, right? And you go higher. I think this is a leading diagonal for a 5-wave motive move into a 1 here. And now we're getting an expanded flat. And therefore, this is going to take a lot less time to get up here than we think. I don't think there's going to be any higher lows here going for bigger price action. I think the A is already in, the B is already in, and we're looking for an impulse C wave. Now you can see where the confusion would be here, because most people are probably looking at this as being the end of a wave right here, and now we're getting our first impulse wave to go higher. All right, so those are your 2 bull and bear scenarios. I'm on the bear side, and we're looking for this gap to close and somewhere right around this golden pocket to start. We'll start layering on our puts right here at the 50%, and we'll leave our calls. Our furthest ones are out to 686 up here out into next week. And then our puts that we start layering back in are going to be out in late November. All right, starting there. Okay, so let's go back to the 65. And let's kind of zoom through this. Let's kind of learn off of what we saw here yesterday. Here's your trend. We're starting to fight that trend. I do think this will be a fake break, getting above it, but we will have to see what price gives us. The moving averages, all these. Okay, so yesterday is what we were looking at. If this was to be a 1-2 setup and we're getting really bearish, and then you have this 1-2, 1-2, or maybe even a 1-2 here, right? All of this bearishness, we were already at 11 handle in the RSI. So it just was not likely for us to really start moving lower. Okay, so that gave us our first clue there. All right. So also the slow stoke, we were getting a buy signal early on at the close yesterday. We were getting this buy signal on the slow stoke, and that was going to give us a headwind to the downside. So, you know, if we're expecting out, this was moving up. not aligning with the MACD. So the MACD could get this crossover, but we're in bearish territory. I do think this is going to cycle lower, but right now we might even get a little whipsaw before heading lower since we're getting this nice move to the upside. And now we're fighting with that 20 EMA, and guess what's above? That 50 EMA on this lower time frame, the 65. So that lines right up with our 683. And money flow, we can look at, it's moving higher. We have accumulation, DMARC. We're at a 3 count, no setup here. Bollinger Band, we're fighting with that 20. We just talked about that, but this is the exponential. So they're coming in pretty much together. And just look at the Elliott oscillator. We're in the bearish territory still. We might see our way back up to the 0 line. And then I do think we might end up with just staying in this red territory until we get positive divergence at the end of our wave count. So if you're wondering what the wave count is, and then we'll move to Tesla. The wave count here is just simply a 1-2 setup. And then wherever we see price reverse, right now we're anticipating a reversal here at the golden pocket. We'll be looking for the 660 area, also our channel to break, and then a bounce, and then a wave 5 there. So we're looking for a 5-wave move into lower prices at this point. I don't have exact targets there yet. I do have full all-out targets for this entire move, and that's 634 and 619. So those still remain our first and second target. I don't know if we'll get there. Depends if there's a catalyst on this wave 3. Wave 3 does not have to end at 659, at 660. This is just a guide for us. It's an extension. Wave 3 typically makes it to this area, and it will be good support, so it could act as support. But this will give us a clue that wave 3 is going, and we're looking for a trend change. And so we should get a 4 and a 5 instead of this being an ABC correction. All right. So let's go over to Tesla, see if we can learn something off this. All right, I'm not going to do the wave count right now. We're just going to go strictly with our traditional technical analysis. And Tesla loves to form triangles or wedges. And what we're doing right now is forming a expanding wedge. Now, from the deliveries here the other day, we did have a high, and we broke down from there. We broke that new high. So that opens up another move to the upside. Now, that could be a double top. This could be over. Great. But we're taking our chance here. The setup is great. And guess what? You saw all those 480 calls. Those are lining up. They've been lining up for quite some time. There's a big call wall here at 480. Now our options expected move is at 483, and there's also a large position at 500 as well. So this very well could take off to 5. Now, with this being a expanding diagonal, if this is the end of this wave, or it could be a leading, right? And then you get a higher low and you go higher. But with this possibly being the ending diagonal, this wedge, we have a 1, 2, and these are made up all 3 waves. 3 up here, that's an A, B, C for 3. 4 at the bottom of the wedge, and this 5 up here to our targets, along with a possibility of throwing over this wedge into 500, and then going into our catalyst tomorrow, which isn't until the shareholders presentation isn't until 3 p.m. So we're probably not going to get that move directly off of the shareholders meeting. We might have a reaction afterwards. So if we do get a move going into tomorrow that goes higher, then it's probably sell the news. Okay. If we don't move until we get our catalyst, maybe that will lift us higher. So that's how we look at things with charts. The setup is here, but will it do it before or after? That's kind of what we're looking at. Or will it just completely fail? That's the risk there. But it does appear that we're getting all of that options flow. We're getting the push off lows here today. And we also noticed, again, the same thing. We're going into support here, the gap support. We have a 20-day moving average if you're on the daily time frame. We have this 200 moving average right now, all in confluence while we were at a 13 handle on the RSI. Just didn't fit right, okay? So that's where our setup is. We're getting a buy signal and a slow stoke, and we're curling up on the MACD. Now, the MACD is kind of going sideways. That's because we're in a sideways formation. I know it's ascending, but we're within a range. All right. I hope all that helps you guys. Here's the VIX. Let's just follow through with the VIX, and I want to show you the inverse head and shoulder setup that we have here. So I'm still bearish on the market. We're closing this gap. We're getting into support. We have a left shoulder, head, right shoulder, and we're looking for the neckline to be right around that, I believe the 19. Yeah, that 19 point. And by the way, we already hit that options expected move here. We had that channel that's broken. That was our first move. If you paid attention a little earlier, the 50-day moving average and the 100-day moving average, just a little bit lower. So we could break this. You don't have to, and then whip to the upside. All right. Inverse head and shoulder setup on VIX. Says bearish for the market. Wait till after this bounce. Here we go. Don't forget to like and subscribe. We'll see you in the next video.